Now, what started off as a nuisance to shoppers has now become one of the most effective promotional campaigns in local retail history. Stikeez has had parents and guardians succumbing to the pestering power of their children and purchased more items than usual to make the 150 Rand quota for these novelty toys. But is the marketing gimmick enough to turn around the company's losing streak? Shrinking market share and increasing costs are only some of the recent battles that this retailer is faced with. But joining us to discuss Pick n Pay's turnaround strategy are retail analysts Alec Abraham from Sasfin Bank and Chris Gilmour from Absa Wealth and Investment Management. Gentlemen, thank you for your time. Alec, let me start with you. I don't know if you've got any children, but Stikeez, is it working? Is this the biggest, the retail gimmick that's worked?
It's yet another marketing campaign. Retailers have marketing campaigns all of the time, and this one seems to have been a little bit more exciting for the kids. But I must say, my kids haven't caught onto it yet. So, I think maybe a lot more being done about it than we believe.
Chris, let me come to you with these retail gimmicks or loyalty cards. Spurs out with their numbers and that 20 Rand breakfast that everybody's been raving about. Do these work, these loyalty programs and these gimmicks, all to get the consumer excited?
They do. And I mean, you mentioned Spur, and this morning Pierre van Tonder told us, Alec was at the presentation as well, that you spend 1,000 Rand at Spur, you get 50 Rands back. So it's what, 5% of, is my arithmetic correct? Okay. It's not an awful lot, but I think it's enough. And it's strange psychologically how these promotions actually work. I mean, I know very, very wealthy people who get so upset if they leave their loyalty card in the car and they don't get the points. I mean, it's quite amazing. So I think over many decades, many retailers have found that the psychological pull that these loyalty programs have got is quite immense. And the Stikeez thing, we were talking off air earlier, and it's amazing. I would never have thought this thing would have taken off. And you look at Europe with Lidl, for example, didn't take off that well. And maybe it's because of the demographics. We've got a much, much younger population in South Africa than they have in Europe.
Now let's move our focus back to Pick n Pay as a whole. Just Alec, where do you stand when you look at Pick n Pay? Has it been able to do this turnaround strategy? Do you feel like it's on track?
Yes, they've done a lot of good work. I think a lot of that has accelerated with the arrival of Richard Brasher. They've done work in terms of cutting down their costs, in terms of category buying, consolidating their procurement infrastructure. So they've done a lot of good work. However, I think you will really see a turnaround in profitability of that business when they sort out their distribution. They've been focused on direct store delivery for many, many years, and in its day it was the right approach, but they didn't move the times to move to central distribution. And the situation we have now is we have duplicated costs. They're running a central distribution model as well as a direct store distribution model. And they have to do that because they can't rely on central distribution alone right now. But as soon as that comes on stream, there's a lot of other benefits that will come from that. With the central distribution, you don't need warehousing space at your store, for instance. So a lot of the store space that's currently being used for warehousing space that they're paying retail rentals on can either be done away with or converted to shop front and increase your store size. So a lot of the profitability you've seen improvement coming through from the cost savings, but I believe that sorting out the distribution is going to be the really big carrot out there. And we're on our way to that target at the moment. The golden number you're looking for is about 80 to 85% of your store's supplies being supplied out of the central distribution warehouse. And at the moment we are around about 50-55%, so possibly a year or two to go.
So Chris, I see you were nodding your head as Alec was going, so you're clearly in agreement. If they get this distribution story right, Pick n Pay could be a really big player here.
Yeah, no, Alec is quite right. And look, they're Johnny-come-latelys is the way to describe it. And I don't mean that in a pejorative sense. But I think if you look at ShopRite, you look at Woolies, and particularly Spar, that has been their forte. It has been centralized distribution. If you go back 15, 20 years ago, ShopRite were nowhere when it came to IT. And yet they took a view that they had to really get into this in a big way. So Pick n Pay they were out of it for a long time. But as Alec says, they're clawing their way back. ultimately, all of it comes back into the operating profit margin. And when they get the improvement in the central distribution side, it will improve their margins nicely. I mean, they're currently sitting at, Alec, what 1.5% or thereabouts?
2%, yes.
It's very poor. I mean, ShopRite's 2-3 times that. So they've got a long way to go. And in terms of bringing back customers, and that's different again from the whole centralized distribution side, they've probably got to do more and more on the loyalty card side, on the promotion side, to try and get that excitement, get the footfall through the doors, and doesn't matter whether it's kids pestering the parents, it's all grist to the middle and it all works.
Woolworths has done that very well in terms of the Woolworths loyalty card. What is it that do you think that Pick n Pay could learn from such retailers when it comes to still trying to gain that market share?
Well, look, to gain the market share, Woolies has done what any good retailer is supposed to do. They've had compelling, fresh offering in store. They have a very good shopping environment, shopping experience. They're becoming more compelling on the pricing, and they have a lot of stores. So they've done all the right things, particularly now with their supermarket strategy, which is really gaining momentum. So marketing campaigns will help from time to time during the running of the campaign, as we see now with the Stikeez for Pick n Pay. But if the customer is drawn in by the campaign but is disappointed when he gets there because of poor on-shelf availability or poor offering, poor fresh or no innovation in foods, then you're going to lose that customer anyway. And that's exactly what Woolworths has been doing particularly well recently. The other issue is that with the central distribution, by not having central distribution, Pick n Pay hasn't been able to expand its convenience stores, a smaller format store, where that's where the growth has been over the last 10 years in the grocery space, has been on the convenience side, with more and more people working full-time, husband and wife working, smaller living units, not a big pantry anymore. You've had more frequent stops to your supermarket to buy fresh stuff, to buy smaller quantities. And without central distribution, Pick n Pay couldn't participate in that convenience market. So that's why they've been losing relative market share, because the market's been growing, but they haven't been in on that growth.
Chris, how does Pick n Pay's African growth strategy compare to the likes of ShopRite and Woolworths and all the other retailers? Are they just as aggressive?
To me, it's a lot smaller, and one of the reasons it's a lot smaller is because for many years they were deflected, they were diverted into Australia. They went into Franklin's, and that was an exercise in futility because they had to come limping back and go and put a lot more resources back into the rest of Africa. Having said that, in Zambia they're doing quite nicely, and they do have bigger plans for Africa. But again, they're Johnny come lately. Yes, of course, they were in TM supermarkets now, which has been rebranded in Zimbabwe, but and they've been there for quite a long time. But in terms of the comparison with ShopRite and with Massmart, they're not quite in the same space. I do believe that they're trying very, very hard, and that will be a big growth area for them in the future. But again, they're coming from a low base.
Alec, in terms of their strategy there, where can they still, do you think that they can get this right in ensuring that they can make inroads into the rest of the African continent and capture this opportunity?
It'll come at quite a cost. The advantage that ShopRite has on them at the moment is that over the last decade, almost 2 decades, they've been putting down infrastructure to distribute into Africa. So that's a massive, massive advantage. Pick n Pay doesn't have that distribution infrastructure into Africa. So arguably it's going to cost them a lot more to expand into Africa than it does ShopRite. Also, ShopRite has not been making it easy for them. Knowing that Massmart is looking to get into that space and Pick n Pay, they've been opening stores left, right and centre. So they've got making sure they've got all the good spaces. So it's going to be an uphill battle for both Pick n Pay and Massmart, for that matter, to get into, 1, the lower income areas, and 2, into Africa.
What about the new player, Choppies? In Botswana, came South Africa. Everybody seems to be raving about them. Where do they fall into this retail space?
They're a disruptive force, and they're doing extremely well. As you say, Botswana based, they've got a few stores in Rustenburg and places like that. They recently bought, for $10 million an operation in Kenya. So they understand the rest of Africa exquisitely. They're traders, they're operators. They really are very, very nimble. They've got a major price advantage. Not entirely sure how they do it, but their prices are significantly cheaper over a wide range of products than many of the players we refer to right now. So I think if you understand the African space, which is quite different to the South African space in many, many ways. I think a lot of retailers make a big mistake by going in and thinking one size fits all. It doesn't. So I think Choppies, they've had a bit of experience, they know what they're doing, and they're growing very aggressively.
And if I can add to what Chris said there, I think one of the other advantages that they have at the moment is that they invested in central distribution. And they already have a number of central warehouses in Africa. And that makes a very, very big difference. The other advantage they have is that they're quite small. So from here, it's going to be quite explosive growth that they can achieve by opening stores.
I'm just wanting to understand the retail space. Is it just not very saturated in different regions? There was a recent report that came out and it showed that in terms of retail potential, Gabon was sitting at #1, Botswana was sitting at #2, and your usual suspects like your Nigeria and Kenya seem to be falling out of the top 5. From a regional perspective, are we getting a sense that maybe it's easier to penetrate certain markets than others, Chris?
Look, I don't know what the number of supermarkets is in the whole of Africa, but I remember speaking to Kuro Chihota about a couple of years ago, and he said there's something like 10 or 12. That's grown enormously since then. But given the size of the continent, given the number of people we're talking about, there's still a huge way to go there. There are some major problems that you have to surmount, not the least of which is land. I mean, the going rate for land, if you want to buy a bit of virgin land in Africa and put all your stuff on it, is going to cost you $4 million an acre. No one's going to pay for that. So getting land is excruciatingly difficult and excruciatingly expensive. So yes, there are some hurdles built in. But I think even with some of the problems in places like Nigeria and Angola with the lower oil price, and in places like Zambia, which have got 10-hour power outages a day, it doesn't matter. The longer-term prospect for Africa is still so compelling that even with all of those obstacles, companies are going to go in there for the long term.
Alec?
I think Chris is quite right. There is still quite a bit of opportunity, but I think you have to be quite a unique operator to monetize that African opportunity. I believe, you need to be a bit of a wheeler dealer, and I think ShopRite have done that quite well. I think Choppies also understand the markets that they're in, but for more formalized businesses, it's going to be a bit of a learning curve. So I think you'll still find some bruised knees in retailers' experiences in Africa. But to come back to your saturation point, I think in South Africa what we are seeing, while there is still some growth, if you look at the real like-for-like volume growth of all of the retailers, you're starting to see more and more negatives coming in. So I think that in South Africa at least, particularly with what appears to be structurally lower GDP growth that we've been seeing over the last couple of years and lower consumption generally, you are seeing signs that we are reaching that point.
Just before we wrap this up, let's just make sure that we're all on the same page in terms of our stock picks. So Pick n Pay, the outlook for Pick n Pay, and also the outlook for the sector as a whole from South Africa, and can move into other regions if you wish.
I endorse fully what Alec said. I think we're going to experience some pretty low growth in South Africa for quite a few years to come. We're probably going to see austerity budgets for a while yet, 1.5% to 2% growth. It's not conducive to that middle market. I'm not wildly optimistic about Pick n Pay. I think Richard Brescher's doing a great job, but he's got a lot of leeway to claw back. If I had to pick one stock, without undoubtedly it's Woolies. It's capturing the emerging middle class, and it's also got it's not looking quite so good at this point in time with the Australian dollar, because that's a bit of a commodity play, but nevertheless, it's still going to be stronger than the rand. So, I think they played it extremely well on both fronts, so that would be my pick.
Okay, Woolies is your pick. Let's get your pick,
It's going to be very unexciting because I agree wholeheartedly with Chris.
Do you? But you just said that they have to get their distribution centres right. Once they do, I mean, the long term that's maybe not the time to get into Pick n Pay.
It is. The issue with Pick n Pay is I'm not quite certain how easily they're going to get their lost market share back again. It may be too far gone. But also a lot of the upside, because we're going to see fairly explosive growth in earnings over the next year or two as we get a lot of savings coming through, and as that margin goes from 2% to 3 or 4% on that sales base, it makes a huge difference. But a lot of that is already in the price.
A lot of that already in the price. So you both say Woolworths, your second
Very
pick,
much so.
not Pick and Pay at this point. Gentlemen, thank you so much.